Hey, what's up, my friend? So in today's video, I want to share with you a trading system. In fact, it's a Bollinger Band trading system that has generated 2,834% over the last 25 years. And I'll give you the exact trading rules of this trading systems, the setup, the entries, the exits, the risk management, and trading examples. So you can see how this works, and hopefully you can use the concepts, the strategies, the insights, and apply it to your own trading and get results. Sounds good? Then let's get to it. So first thing is the concept behind this trading system, and it's very simple. In fact, almost all of my trading systems that I trade, the concepts are relatively simple. If your trading system, the concept is too complicated, chances are, you are curve fitting or you have something that probably doesn't work in the live market. So most, right, if not all of my trading systems, the concepts are very simple. So for this system, the concept is simple. We are identifying stocks that are in an uptrend. Okay, we are waiting to buy on the pullback. Okay, if it's oversold. So you might be wondering, Rayner, how do I define a pullback? How do I define when the stock is oversold? Don't worry, we'll get to that shortly. So once the stock makes a pullback, once it's oversold, we buy. Okay, and when it makes a bounce higher, we sell, thereby capturing this one swing over here. So in other words, you can treat this like a swing trading system. Usually your trades are a few days, right, and you're out of it. So let's move on and talk about the rules of this trading system, what markets we are trading and stuff like that. So we are trading stocks in the Russell 1000. This means the largest 1000 stocks in the US stock market. The reason for this is that these stocks are highly liquid. You can buy and sell with relative ease, right, without much slippages. Time frame is the daily time frame, and risk management, this one is important. 20% of your capital and a maximum of 5 positions. What do I mean by this? So whenever you need to buy a stock, right, the next logical question after the setup, after the entry, is how much stock to buy or sell. So this is where your risk management comes into play. Let's say if you have $100,000 trading capital and you know that you can only hold a maximum of 5 stocks. So how much money should you allocate to each stock? 20%, right? That's what we have stated over here. So this means, let's say you have a valid trading setup opportunity on stock A. What's the dollar value of stock A you're going to buy? You're going to buy $20,000 worth of stock A. Let's say you have another trading setup on stock B. How much dollar value of stock B you're going to buy? Another $20,000. You're going to do this for a maximum of 5 stocks, because if you were to buy all 5 stocks, then all your $100,000 trading capital will be used up. And we are not using leverage, so this is why we have a maximum allocation of 5 stocks and 20% of our capital allocated to each stock. Next one, the juicy bits, the exact trading rules. Okay, so you know the concept of the trading system which I shared with you earlier, but taking the concept to define it into a setup, the entries and exits requires more than just a few lines. So we're going to break this down step by step. First one over here is how we define the uptrend. The stock price must be above the 200-day moving average. Now some of you might be wondering, Rayner, is that the simple moving average or the exponential moving average or the weighted moving average? The answer is, it doesn't matter. Right? The concept is what matters, because you can use a simple moving average, a weighted, blah, blah, blah. The end result isn't really going to matter much, because that squiggly line on your chart is more or less around the same place on the chart, regardless of whether you're using exponential moving average, weighted, or whatsoever. So the key thing is that we want to make sure that the stock price is above the 200-day moving average. This is how we define the uptrend. So why do we want to buy stocks in an uptrend? Reason is simple. Stocks that are in an uptrend, they are likely to continue going up higher. For example, you're feeling a little bit horny. You want to make love to your wife. Are you going to pop the question? Are you going to hint to her when she's in a good mood or in a bad mood? I think, logically speaking, all men is going to say that they are going to approach their wife when they are feeling in a good mood, right? Not in a bad mood. So same thing, when you want to buy stocks, you want to profit from stock trading, stock investing. Okay, maybe not stock investing, but stock trading. You want to do so when the stock is already in an uptrend, because there's a good chance it will continue higher. And that's where you can make money. Second thing, the stock price closes below the lower Bollinger Band. So this is how we define the pullback. So there are many ways to define the pullback. Some people can use, RSI indicator, 10-period RSI below 30, below 20, etc. But in this case, we're using the Bollinger Band. So when the stock price closes below the lower Bollinger Band, right, That's how we define a pullback. And the settings for the Bollinger Band, you can just look over here at the bottom. We're using a 20-day moving average and 2.5 standard deviation. So once the stock price has made a pullback, what's next? We are going to place a 3% buy limit or order to help us define that the stock is temporarily oversold. So imagine this, right? I'll share with you some examples later on, but let me just kind of like use this over here. Stock price, okay, makes a pullback. Okay, so let's say at this point, it closed below the lower Bollinger Band over here. So what we're looking for is for the stock price to drop another 3% the next day, intraday basis, so we can go long. We're going to place a 3% buy limit order, so we're going to get filled somewhere about here as the stock price drops another 3% on an intraday basis the next day. So once we get filled, you can imagine that we are kind of buying on a falling knife, yeah? When there's a lot of fear in the markets. So once we get filled on our position, now our setup is met, our entry is met. When do we sell? When is our exit? We will sell when the 2-day RSI crosses above 50 or after 10 trading days. So over here, we have two parts to our exit: when the 2-day RSI crosses above 50 or after 10 trading days. So why is there two parts to our exits? Most of the time, your exit, right, will happen when the 2-day RSI crosses above 50. So in other words, what's going to look like on the chart is that we are going to see a slight bounce up. Let's say this is the pullback over here. You're going to have a slight bounce up higher, right? And over here at this point is where the 2-day RSI crosses above 50, and then you sell the stock. But there are times when the stock price just doesn't bounce. In fact, the moment you buy, it keeps dropping lower and lower and lower. But you still need to get out of the trade eventually. You don't want to hold it, after it drops 70-80%. So this is where the stop loss, a time-based stop loss, comes into play. You hold it for a maximum of 10 trading days. If after 10 trading days, your 2-day RSI is still not met, your 2-day RSI still hasn't crossed above 50, you will still exit the trade for a loss. And then the fifth rule over here. So this is more of a ranking of the system, right? Because you're trading stocks in the Russell 1000 and there are potentially 1,000 trading opportunities, right? But it's unlikely you get 1,000 trading opportunities. But sometimes you can get, 50, 100 potential trading setups. But you can only buy 5 stocks at the maximum. Why 5? Because we mentioned behind over here, maximum of 5 positions. So now, how do you then decide which of the 5 stocks you want to buy, assuming that criteria 1 to 4 are met? So this is where we rank our stocks according to their rate of change. In other words, we want to buy the strongest stocks out there. We want to buy the strongest stocks that has increased the most in price over the last 150 days. So this is how we narrow down, filter down the list of stocks to the top 5 strongest stocks. And yes, right, this is now the rules of this trading system. And because this is a systematic approach, this is an objective trading system. This is what I call systems trading. You can actually backtest this entire trading system, and this is the results of it. 2,834% over the last 25 years. Right? So this has, it has traded in the dot-com bubble, the 2008 financial crisis, COVID, Russia-Ukraine war. And you can see that it has been consistently profitable over the last 2 decades. If you want to drill a little bit deeper, you can see that over the last 25 years, annual return is about 14% a year on average in the long run. 66% winning rate, 33% losing rate. Average profit percentage is about 4.1%. Average loss is 4.7%, and a maximum drawdown of 27%. So this trading system has a relatively high winning rate. The so-called downside to it is that your average profit is usually smaller than your average loss. So if you look at it from a risk to reward standpoint, you're kind of like risking $1 to make 80 cents, 85 cents, thereabout. Okay, now let me walk you through a chart example so you can see how this works. So we have one trading example over here. I'm using the replay mode so you can, kind of like see how the criteria are met. So remember, first thing first, we're looking for the stock to be above the 200-day moving average. So I'm just going to change this to 200. I like this to be black color because that's just my preference, even though I just wasted 3 seconds of your life. Okay, and there we have it, right? I'm going to bring out the 200-day moving average. There you have it. The stock price is above the 200-day moving average. So what's the second thing we're looking for? For the stock price to close below the lower Bollinger Band. So I'm going to pull out my Bollinger Band. Okay. I think it's this one, probably, yeah. Okay, then I'm just going to change the settings to the one we are using. Inputs, 20 is correct. Standard deviation, 2.5. And I'm going to press OK. And there you have it, right? Now you can see that the stock price has closed, rather the stock price here has closed below the lower Bollinger Band. Now what's the next thing? If you recall, the next thing is then to place a 3% buy limit order. And now for this, I need my calculator. Okay, there you have it, my trusty calculator that I use right whenever I calculate position size for my trading systems. So what is the closing price on this day? The closing price on this day is $27.71. So what you're going to do is just take 27.71 multiply by 0.97 to know what is the buy limit order price that we need to place it at. So 27.71 multiplied by 0.97 gives us 26.88. Okay, 26.88. If I round it off to the highest, the higher decimal place, 26.88. So what you're going to do is that, assuming now the market is closed, the next day you're going to place a buy limit order, which is 20% of your trading capital, at 26.88. So I'm just going to use this tool. Okay, let's get the horizontal one. Let's put it to green, right, to signal our entry trigger at 26.88. Okay. So next day, if the market touches this green line, we would have gotten filled on this trade. This would have met all our criteria of this Bollinger Band trading system. Okay. Boom. You can see over here, next day we had a gap down lower. Clearly, we would have gotten filled on this trade. In fact, we probably got filled at a better price than what we expected, probably around 26.6. And we have gotten filled on this trade. Now, the next thing is, when do we sell this position? So remember, our exit has two parts to it: when the 2-day RSI crosses above 50 or after 10 trading days. So in this case, I'm going to pull out the RSI indicator. Again, the default settings on TradingView, it's enough. Just change the settings to period. I don't need the SMA and stuff like that. Okay, and I can actually remove this, not needed, and press OK. So what we're looking for is for the 2-day RSI, which is this value over here, which is currently now 0.95, to be above 50. Because for that to happen, right, the market needs to actually close higher. So let's see what happens. Right, not yet, right? Now the value is 0.47. As you can see over here, the value here is 0.47. So our exit criteria is not met. 15.62, not yet. 13.36, not yet. Boom, you see this over here, 71.53. Okay, so this now means that our exit criteria is met and we need to exit this trade. And when do we exit? We exit at the next day open. So when the stock price opens the next day, over here, we would exit this trade. And in this case, it's probably going to be a losing trade, but it's irrelevant, right? Because this trading system, we want to backtest it and run it over thousands of trades and not just, based the quality based on the performance on the trading system just based on one chart. It doesn't quite make sense. It's random. Now, I'll do another example so you can understand how this trading system works, but I'll go a bit faster since you're already kind of familiar with it. So first thing first, the stock price is above the 200-day moving average, so it's in an uptrend, good. Second thing is we are looking for the stock price to close below the lower Bollinger Band. As you can see over here, it did. Great. So next thing we're going to do is to place a 3% buy limit order to see if we can get filled on the trade the next day. So this stock price, the closing price in this case, it's 113.7. 113.7. What we're going to do is multiply by 0.97 to know what price to place our buy limit order. And in this case, the price is 110.29. Okay, 110.29. So we're going to place a buy limit order at 110.29. So I'm just going to get this one out. 110.29. Okay, so this means the next day, if the stock price touches this green line, which is where our buy limit order is, we will get filled on the trade. And of course, we got filled on the trade because this is a cherry pick chart to illustrate to you how this works. Now, once you're filled on the trade, when do you sell? You sell when the 2-day RSI crosses above 50 or after 10 trading days. So if you pay attention to the RSI values right now, currently it's about 7.7. Let's see. Now it's 5. Now it's 50.4. Great, it has met our exit criteria, but now the market is closed. When can we exit the trade? Well, we'll do it when the market opens the next day, which is, boom, over here. So in this case, the stock price opened at this level over here. You would have exited this trade for a profit. Okay, what I've just shared with you is what we call a mean reversion trading system, and it's one of the concepts, proven concepts, right, that I use in my own live trading account. So of course, there are other concepts like trend following. How do you know right massive trends in the market? And it's something that I'm not able to cover in this video because I want to keep it related to the Bollinger Band trading system. So if you want to learn the concepts about trend following, then what you can do is to actually go over here and download this guide called the Essential Guide to Systems Trading. Reason being is you just go to my website over here, tradingwithrayner.com. Just scroll down a little bit and you'll see this guide, right? This black color, sexy looking guide. Just click this orange button and enter your email address and I'll send it to your email for free. So what happens is that in this guide, I will share with you the concept of trend following, how you can actually ride massive trends in the market. And to take things a step further, I will also give you the exact trend following rules so you can understand how the concepts and strategies work. And not just that, right? I will also teach you the framework, how I go about developing profitable trading systems that has a high chance to work, right? Even if you have tried everything else and failed. So this is the framework that I actually use to develop till today, right? 7 trading systems that I trade in my live account. So again, if you want to learn the exact framework, if you want to learn more about trend following, how to apply trend following to ride massive trends, a simple trend following system that works, then this guide, the Essential Guide to Systems Trading, is what you need. I'll put the link below this video, or you can go directly to tradingwithrayner.com and download a free copy. So with that said, I wish you good luck, good trading, and I will talk to you soon.